So it's official, the Tax Cuts and Jobs Act is now on the books. So sweeping changes, lowering corporate tax rates from 35 to 21%. I guess that's probably the lowest it has been in America.
Yes, it has for a long time. So,
And the individual tax brackets are lowering on the highest end down from 39.6 to 37.
37%.
And across the board, in the middle, there's 7 brackets, so each of them have been adjusted. Is that the case?
Yes, they've lengthened the brackets a little bit so that people will be in a lower bracket as opposed to current law. So they should see some savings there. But what a last-minute change that is, they originally thought that the high bracket of 37% would kick in at $1 million income for a joint filer. The last minute, they lowered it to $600,000. So that was a little take-back when the Senate was doing their negotiations to come under the budget limits.
A lot of things happened at the last minute.
Certainly did.
And people will be digesting this for quite a while into the new year.
And then beyond. The bill is 1,100 pages long. And that's just the changes to the existing code. So if you took all the code sections they had changed, you'd probably have over 2,000 or 3,000 pages. There's a lot in the bill. There's a lot, as you said, sweeping changes. It's anything but tax simplification. So people need to be patient and allow their accountants and attorneys and advisors to go through it, digest what the law says, and then how it applies to each individual situation.
Great. And dentists are... The dentist's office is very capital intensive. It takes a lot to, meet this digital age now of, and all the interoperable equipment. So it's expensive. And, we help dentists understand and implement technology, but there's an ROI. And though there are tax benefits for dentists, and Section 179 has been used for lots of years, that I tell people, hey, it's going to lower your taxable income, but I think you could probably put it in some better words. And so let's talk about that.
Sure, and there's actually another provision that may help your the dentist as well. Section 179, as you said, is an expensing provision which allows the taxpayer to expense a capital improvement that you otherwise would have to capitalize and depreciate over 3, 5, or 7 years.
Right, and that's
it's an immediate write-off.
And that's equipment, technology, off-the-shelf software.
Correct. And right now, the limit is $500,000, but it's been increased to $1 million. And there's certain phase-outs, which I won't bore your audience with, but it's been increased. Very favorable. And that takes effect next year. But one of the major components of this entire tax bill was to grow the economy and spur spending. So they've added a provision of bonus depreciation, which apart from Section 179 allows you to write off those same assets without the limitations. And it gets phased out starting in 2024. But right now you can expense 100% of the assets. And the important thing for your audience to understand is that it applies for any asset purchased after September 27th of 2017. So if you've bought those assets bought after September 17 and place it in service, by the end of the year, you can get that 100% deduction this year when Section 179 may not apply.
Sure, because our customers, we call them SMEs, small to medium enterprises. And, there are some practice owners that have many locations and employ a lot of people. So actually, the tax bill, there's things for everybody in kind of every taxable bracket.
Correct, but some more than others. There are some industries that were, I'll say, excluded from the bill, and those are largely personal service industries, accountants, attorneys, medical services, financial services, brokers.
Okay, so you say medical services. So if a doctor is a PC, professional corporation, then what?
Well, I'm talking about the pass-through treatment.
Okay.
So you've got C Corps, the rate went from 35 to 21.
C Corps, right?
C Corporation. So someone that's a pass-through entity may consider changing in 2018 to become a C Corporation, especially since the individuals will no longer be able to deduct their state and local taxes, but a C Corp still can deduct their state and local taxes. So that's something to look at, especially if you have a growing business that needs a lot of working capital and is reinvesting the earnings in the business. Well, why pay 40% tax when I can pay 21% federal and perhaps reinvest the money in the business with a lower tax cost? In addition, there are a couple of provisions that have been in the law for a long time which attacked the old days when C-Corp rates were actually lower than individual rates, personal holding company and accumulated earnings tax, they all need to be considered. But coming back to the pass-through entities, which are sole proprietorships, partnerships, and S corporations, which has most people practice in these days.
Sure.
If you're in that personal service business, okay, subject to phase-ins, which I'll get through in a little bit, personal service businesses do not get the benefit of that float of that 20% deduction, because there's a bias in Washington against service businesses, frankly.
Which is a pretty big part of the economy.
It absolutely is. And the only service business that benefited was the architects and engineers, because at the last minute,
I saw that carve out.
they were carved out. So they must have that. Kudos to their lobby. And shame on all the other professional lobbies who weren't strong enough to get them removed. So, but getting back to service businesses, however, if you have someone, a doctor, a dentist, whose taxable income is $315,000 or less on a joint return, or $157,500 on a single return, they can use the benefit of that 20% deduction because they are considered the small businesses.
Which is going to be a substantial amount.
Could be a substantial amount. But the income that's subject to this 20% deduction doesn't include compensation paid to a dentist. For example, an S corporation shareholder taking a salary out, that income doesn't qualify. It's only the net income of the S corporation. And if it's a partnership and someone is receiving guaranteed payment, which is akin to a salary in the partnership context, that doesn't count. It's only income over and above quote unquote reasonable compensation that gets this beneficial deduction. And the other thing to watch out is as someone's income increases above those threshold amounts, the marginal rate can be quite high, because in addition to paying tax on the additional amount of income, you're taking away the benefit of that 20% deduction. So it's, there's a lot here.
But some things haven't changed. And one thing I think that's good, if you're a medical student, dental school student, if you're a graduate assistant, a research assistant, if you're getting money from the university, that's taxed or non-taxed?
No, that's still taxed. The law hasn't changed on that. That's I think, a very helpful provision to have in the law. I don't know why they attempted to take it out in the first place. It wasn't a large budget raiser in terms of, plugging the hole they needed to do. I think that's a good provision that's in there. Anything that can benefit and incentivize people to go to graduate school and learn and become productive members of society is a great thing. So I'm glad that did not change.
So hopefully we will still have an adequate and ample supply of dentists to
Of course.
meet the growing oral health needs of Americans. So it's really amazing how much has changed, and hopefully people, our SME customers will have resources such as your firm or others
Sure.
that are really staying on top of these sweeping changes.
Yes, and the only thing, as I said before, a little patience, because there's a lot here, and there's a lot of unintended consequences we're finding, and we're also hearing that they may be preparing a technical corrections bill to correct some of the errors in the bill, or where things haven't been coordinated
Right,
properly.
because some of the payroll companies said, hey, we won't be ready on January 1.
And the IRS won't be ready, and they have to get W-4 forms out, so just patience, everyone.
So the news is the Tax Cuts and Jobs Act is done.
Done.
It's on the books. Hopefully everybody's going to spend some time with their families over the holidays.
I certainly hope
and
so.
a good new year. And then we will all digest and see the opportunities for both individuals and businesses. Joe, you've been a great source of information, reassuring. Thank you.
You're very welcome.
This is Keith Drayer for Schein Chats. Please visit us at the Henry Schein Facebook page or go to henryschein.com/Schein Chats. Thank you.